Hello traders, Cousin Vinny coming to you from theclosingprint.com, May the 2nd, 2021. In this edition of your weekend video newsletter, we'll discuss the indices, all of which moved lower last week with the exception of a modest increase on the New York Stock Exchange and a potential reversal on the Bombay Stock Exchange. We had mixed performance in the big cap tech names that reported last week, with Facebook and Amazon managing to hold on to gains, in addition to Netflix trading on its 8th day after its earnings report, with Google and Qualcomm both up more than 2% for the week. With the markets unable to break out to new all-time highs, we are a bit overbought. There is a possibility we could pull in. Bonds look like they will continue their bottoming process. They're trending a bit higher. That might be a good place for hedges. But sentiment in Tick and TickQ remain bearish going into this week, which could be a result of institutions selling into the end of the month. We have quite a few stocks that we're looking at this week from Scans and from IBD. They're noted as such. Bukowski has 505 green with the CPI signal bearish at 26.3%, 14 bearish patterns, 5 bullish, and 293 patterns waiting for breakout. With our indicators, 6 bullish, 10 neutral, and 4 bearish, giving us a caution signal with short-term neutral, intermediate and long-term remaining bullish. S&P 500 closed above 4,100. That's major support and resistance overhead at 4,200, 420 for the SPY. Now that has rolled up on the SPY to 425, the call wall. We'll have to watch that this week. VIX mean reversion looks like it's headed back to the 50-day. That could send up more caution flags for this week. The S&P 500 Spiders Renko chart remains on a bullish signal. We have white bricks, no red bricks to date, with markets trading at all-time highs going into the month of May. And with the month-end selling by institutions taking their laggards off the books, it looks like we could see a revisit of the 21-day. That would be about a 2% pullback. I've also laid out a 5% pullback, which would be the 50-day moving average. And note this extremely large volume by price zone, which, if we revisited, would probably be a very good area to pick up shares or start new positions. With volume above average, we did see RSI remain above 50, so the trend is still very strong. Above average volume on Friday and Thursday last week. MACD is flattening out and fading a bit, so momentum has slowed. Stochastics overbought. We're looking for ATR to expand. Now that could come on a pullback as well. What we would be looking for is the range that we saw last week expand a bit. It was very tight price action within a few points of each other. Therefore, we are issuing a word of caution as we start the first trading day of May. Removing the weight of those 7 big cap tech stocks, which comprise 23% of the weight from the S&P 500, gives us the S&P equal weight index. We did see a bearish engulfing candle on Friday, so we would be more cautious, as there is a likelihood we could come back and test this trend line. And the 9 and 21 day, 50 days a bit lower, aligning with that breakout zone that we saw back in March on the S&P spiders that we just covered. Growth and value both pulled back last week. Even though we were in this tight range, we saw SMH and XLK growth, semis and tech gaining 12% over the last month, still remain above the 21 day, as we saw with value, materials, energy, financials, and industrials gaining 7%, still above its trending 21-day moving average. IWM for the past 7 weeks have pretty much moved sideways. RSI remains above 50. 8 weeks ago, we had this big bullish candle that brought us up to all-time highs at 234.09. Since then, we've had a hammer 2 weeks ago, last week a shooting star. So we're watching this very closely. This is a risk on, risk off indicator. As traders that would be risk averse would vacate the markets, we haven't dropped off dramatically, so there's something to watch as well going into the summer months. For now, IWM is neutral. An interesting chart of note, the New York Stock Exchange from the March 2009 reversal up to recent highs last week, more than 292% gain. So it's no wonder the bears have got it wrong and are scratching their head. Overall, the New York Stock Exchange, 2,700 stocks, broad measure of market participation, remains above the zero line. Histogram did back off a little bit on Friday, as most likely institutions were taking laggards off their books, looking for a fresh start in May. We do have 242 fewer stocks making new highs than new lows. The moving average continues to make higher highs. Last Friday made a higher low. If this does turn back up and we see buyers come in Monday and Tuesday to start the week, we'll reassess our thoughts on this index. New York Stock Exchange advanced decline did dip lower, as we saw last week with the S&P 500 mid caps and small caps breaking down the three segments, giving us the same sort of appearance with each segment pulling back, despite the S&P 1500 composite of all three of those components giving us a green signal, no change in trajectory of this trend line to date. Histogram did back off a little bit here as well, high-low percent on a cumulative basis. So I would just be a little cautious going into this week with equities and perhaps think about hedging with bonds. The bond stock ratio between the S&P 500 and the 10-year bond is at extremes. We're currently watching for any reversals like we saw back in 2018. We'd need to see a catalyst. That 2018 spike was due to a third interest rate hike leading into a fourth interest rate hike on December the 20th. The markets reversed soon thereafter. We see the same thing in the Bank of America high yield index option adjusted spread. Back in 2018, several months before the Fed announced its latest and last interest rate hike, the markets continued to move higher, then reversed just after Christmas, the cyclical bull market that led into COVID-19. We also had a spike in 2020. The high yield spread index gave us a warning signal and then reversed on March the 23rd, leading to the current cyclical bull market, in which case we saw the high yield index option adjusted spread start to move higher. February 24th was still enough time to get out of the way for a 33% drawdown before the markets reversed in its current state below what we saw back in 2018. Therefore, if you're thinking about the markets topping for whatever reason, an inflation scare or whatever, you need to see the bond market starting to move higher in this particular high yield index option adjusted spread indicator. We are also hedged at the present time. We've been taking some fixed assets like LQD, TIP, and Schwab's Aggregate Bond Fund ETF that we talked about on March 25th on the blog. Looking for that reversal in all three of these instruments, and not just a oversold bounce, TIP, and SCHZ, Schwab's Aggregate Bond Fund ETF, with each of these instruments showing hedging and investors building new positions as we transition across the 9, 21, and 50-day moving averages, RSIs above 50, volume increasing on Friday. This would be a good option for hedging if you're thinking the markets are going to pull back in the short term or over the next several weeks. As the US dollar found a bottom, it bounced last week, headed back towards the 50-day. RSI oversold and started to turn as well. MACD and stochastics moving higher to end the week. And with the dollar moving higher, we'd expect to see gold pulling back. It faded over the last 7 to 8 trading days, while copper also faded a little bit after a breakout last week. Wednesday, Thursday, Friday, we pulled back just a hair, while crude oil remains in a sideways range, fading a little bit towards the end of the week. Despite all of this, the CRB index is managing a breakout of a 13-year downtrend. We're looking at the longer term here, potentially with a synchronized global recovery as vaccines become more ubiquitous and economies open up. We're looking for this breakout to resume and continue into the month of May. This is a monthly chart. Again, issuing a bit of caution going into the start of this new month of May, but most indicators remaining bullish to neutral. Most sectors ended the week at highs. We have real estate moving higher, transports, IYT, airlines, rails, bulk shippers, maritime, and trucking, all some of them moving higher, but the sector finishing the week at highs. The same goes for materials, XLB, communications, thanks to Facebook and others in the streaming and digital advertising, all moving higher. This sector finished just off the highs. Energy on this weekly chart still trying to get through the moving averages and the recent highs. Financials managing a higher high. Industrials took a break for a week with a doji, while technology and growth stocks pulled back the most. Consumer staples managed to find buyers during the lows of the week, pushing back up into the top of its range, still near 52-week highs. And utilities, many of them looking pretty strong this week. Buyers stepping up at the low of the week, finishing at the high of the week. Technology and healthcare, similar kind of look, pulling back the most for the week, reversing off of highs. And consumer discretionary, similar to industrials, took a breather for the last couple of weeks, continues its sideways range. As its subcomponent, retail continues its sideways range as well for the past 7 or 8 weeks. Bottom line, most sectors look good. The ones that are at the highs could pull in a little bit as they are a bit extended, but we'll have to see it first to react and reassess this week. Starting off the week with the markets at all-time highs, we are paying particular attention to stocks that are starting new trends coming through the 9, 21, and 50-day moving averages. So these last two lines, we're watching Bollinger Bands expanding, ADX starting a new trend in green, while the IBD 50 and stocks showing relative strength with rising profit estimates in green and a blue dot scan in cyan. We are a little hesitant as the markets start off the week at all-time highs. Starting off with stocks that have pulled back in the IBD 50 to the 50-day, Celsius looking strong on Friday, looking for the bounce. Need to see a bullish day on Monday. Century Communities in the real estate space, we know that real estate closed at 52-week highs. Looking for this gap and go to continue higher. Draw a trend line through the next pivot low. You can use these two lows for the time being for your stops. With RSI at highs and volume increasing on Thursday, CareDex also just recently crossed through the 9, 21, and 50-day with the 9 and 21-day crossing through. 2 weeks ago and last week on the 21-day, RSI is above 50, volume increasing, showing us institutions have been buying shares. NARI and NARI Medical also bouncing, consolidating at the 9, 21, and 50-day, looking for a push higher this week. NIU Technologies watching how this holds near the 50-day, looking for a follow-through this week. RSI is flat at 50. On to innovation, holding near the 50-day, bullish day on Friday. Need to see a follow-through as a safer entry back above the 9 and 21 day on Monday for potential follow-through. Playboy consolidating at recent highs. Snap, we're looking for a bounce this week as well. RSI is above 50, price above 921 and 50 day. If we can make it above these volume by price bands and that 65 level, looking for a follow-through. Tesla, looking for a pushback above the 9 and 21 day. Need to see a bullish day that resumes on Monday and Tuesday. And B. Riley Financial, holding above the 21 day, looking for a follow-through bullish day on Monday. RSI remains above 50. Volume pretty pronounced 3 weeks ago. Looking for similar price action in the short term. To confirm, these institutions are looking for higher prices. Stocks from the Blue Dot Scan, ALKT, Alchemy Technology, looking for a follow-through, offers cloud-based platform that delivers digital banking solutions to the U.S. banks and credit unions. BIOX, also from the Blue Dot Scan, Bioceres, Argentina-based company providing crop productivity solutions, including seeds and biologicals and fertilizers. Century Casinos, also on the Blue Dot Scan, following through. Volume increasing. We note that earnings were 5 days out, so this would be a short-term day trade or short-term swing trade on a breakout. Monarch Casino already starting to move a bit higher. It had earnings notable and looking for a follow-through. Medallion Financial originates, acquires, and services loans that finance taxicab medallions and other commercial businesses. Note, New York City is supposed to open up by July 1st. This would have a lot to do with that, with earnings on deck to start the week, so maybe we'll watch it after earnings to see how it responds. PANL, Pangea, noting the follow-through, the strength in bulk, and also maritime shippers, the Baltic Dry Index breaking out. We've told you about that the last few weeks. Notable volume. Reneo Pharmaceuticals, a new IPO in the clinical stage pharmaceutical company with therapies for rare genetic mitochondrial diseases. Relative strength line is climbing as it's breaking higher. And SB, Safe Bulkers, another one of those maritime shippers, international tanker transportation services, dry bulk goods through a fleet of 43 vessels. It has earnings in 3 days. A lot of the names in this industry group are moving higher. Make a note of it. Berry Global from the CanSlim list, prepared for IBD, showing relative strength bouncing off the 21 day and following through relative strength on volume. Colgate Palmolive recently passed through the 9, 21, and 50-day moving averages, bounced off the 200-day last week on Tuesday and Wednesday, followed through Thursday, Friday. Look for a resumption of this trend and volume on Monday, Tuesday. I really like this trade, as volume increasing shows institutions are picking up shares on the bounce. Comcast and other streaming services, cable companies, broadcasting, entertainment fared better last week as well. Domino's Pizza and restaurants and bars looked good last week. Could be some opportunities here as well. I wouldn't chase these. I prefer a recent pullback that gets bought. Just making a note of the strength in RSI and the volume. MACD above its signal line and stochastics embedded. As many of the IBD 50 stocks reflect, we're above the 80 zone, so some of these could pull back a little bit before setting up properly. Facebook, many are watching this gap and go potential. That gap needs to hold, otherwise we need to reassess a different strategy. Currently a gap and go. Home Depot flagging for 2 weeks after a big move off the March lows. Looking for resumption of trend or a further pullback for a better entry. JP Morgan, with many of the banks looking fairly strong over the last week or two, coming back above the 50-day moving average, looking for a follow-through as well, as interest rates appear to be climbing once again, the 10, 20, and 30-year yields. LPL Financial Holdings from previous watch lists continues to push higher. L3 Harris Technologies, LHX, back above the 921 day after testing the 21 day. Looking for a follow through this week. As previously mentioned, we're looking for some follow through in some of these stocks that are just starting new trends like AMTI, AIV, and other stocks on this list that are following through back above the 921 and 50-day moving averages. Pause the video and check out some of these names for potential trades like Viracta Therapeutics, VIRX, moving back above the 9 and 21 day. Fairly inexpensive stock at $11 per share. Volume starting to pick up last week. Looking for a follow through. All of these showing up on scans where the 9 and 21 day crossing back through the 50 day. In addition to stocks from the Bollinger Band TTM squeeze scan, you can see Aon took off last week. Insurance brokers, another industry group that looks pretty strong. Hershey's Foods looking for this breakout to continue. Bollinger Bands to open up top and bottom. IDU looking for a follow through. Bollinger Bands expand on IDA, looking for a push higher this week. PGRE Paramount Group looking for a follow through. Real estate, remember, was very strong last week, looking for a breakout. Bollinger Bands to expand. Restaurant brands, along with restaurants in general, looking very strong lately. QSR, owned by Warren Buffett. Consumer finance stocks like SLM Holding, looking for a follow through. Bollinger Bands expand top and bottom. Extended stay, looking for something to happen here as well. Texas Roadhouse, I wouldn't chase it up here, wait for a little pullback, but these Bollinger Bands opening up in an industry group that we've seen a lot of activity in recently. Restaurants and bars, fast food restaurants as well. In addition to the stocks from the opening monologue in green, noted as ADX, stocks starting new trends. We see Stericycle from that group looking for a follow through. Medicine Man Technologies, SHWZ, nice little follow through. It's a $2 stock, $3 stock. Watching for stocks in the industry group to continue higher. Omnicell with a new trend developing, OMCL. DaVita Healthcare showing relative strength, a name I mentioned on Monday of last week, following through Tuesday off of the 9 EMA, pushing higher, volume increasing. Transports faring well last week as we're looking for the airlines to continue higher. JetBlue and Southwest look the best. And finally, Mongo Finance, which is coming back above the 921 and 50 day. This could get a nice follow through. We've traded this one before over here in November when it was trending. Looking for a break higher and a follow through. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter for Sunday, May the 2nd. I'll send out a watch list later tonight around 11:30 on the East Coast, 8:30 on the West Coast, so make sure you check your inbox for that. Otherwise, have a great weekend, take care, and we'll talk to you soon.